Welcome to the class. Today we will discuss in detail three strategies that you can apply in trading Banknifty weekly options on buy side. Before continuing further, I expect the viewer to have all the basic knowledge of trading and about options and options trading and have an experience in trading Banknifty weekly option. Regarding this class, you will get exactly what the title says, a strong conceptual and applicable method of Bank Nifty weekly option trading on buy side. Every sentence I speak has been carefully crafted to communicate the idea. I prefer you do multiple viewing to make sure that you got everything exactly the way I intend to communicate. As regarding the strategies explained in this video, these are some of the fruitful Bank Nifty weekly option behaviors I have seen in my experience over the years. Not to place another day, I have been trading Bank Nifty weekly options from May 16. Yes, from the very first day when it was introduced in the market. Also, these strategies are not empirically tested. Rather, these are picked based on the price behaviors I noticed in my trading over the years. So, with all the format of explaining the strategy, the first part of the section will be explaining the basic idea behind each strategy. Then we will move to when to apply this strategy in the instrument. Our instrument is Bank Nifty weekly option, and finally a stepwise guidance on how to apply with every nitty gritty detail about the strategy to help you apply it in real market in real situations. The first strategy is called closer to expiry. In trading, knowing the direction of the market in short time equals money. This strategy is all about that. This strategy is based on open interest queues in option chain. You can learn about option chain in detail in the lecture given in the description. When to apply? When to apply? This strategy can be applied on Wednesdays on current week expiring options. Example, if the expiry falls on 24 to 2022, then this can be applied on 23 to 2022. Time. It gives better results if we applied it after 1 pm on Wednesdays. Process. Step 1. By 11 am on Wednesday, note down the spot price of the index. Step 2. Note down all the strikes in 400 point range up and down. Example, if the spot is 38404, then taking 38400 as base, on the upside we will have 38500, 38600, 38700 and 38800. On the downside we will have 38300, 38200, 38100 and 38000. Once we listed that, from 11:15 am onwards, note down open interest of these strikes noted in step 2, both on call and put side. Then update the value in every 50 minutes. You can get this data from Bank Nifty weekly option chain, which is freely available on NSE website. For an easier understanding, option chain is split into 4 parts. This part will be called in the money call option, and this part will be called in the money put option, and this part will be called out of the money put option, and this part will be out of the money call option. And the coming explanation all are based on this model, and it'd be better if you know it. Now the next step is understanding the patterns. After between 1 to 2 p.m. Try to figure out from the data from the open interest you are recording which scenario out of these given it is replicated in the market. The scenario 1 could be in a situation where all the side open interest would be increasing. This means call in the money option and open interest will be increasing, call out of the money open interest will be increasing, or put out of the money and open interest will be increasing, put out in the money open interest will be increasing, so on. This situation can be called 1. And coming back to second scenario, it will be all the sides the open interest will be losing. And in third scenario, you will be finding open interest increasing on call side, but on the both put side the open interest will be decreasing. Then another thing is, in call side the open interest will be decreasing, and on the put side the open interest will be building. And in another scenario, the in the money put option and in the money call option open interest will be decreasing. And in another scenario, out of the money call option and out of the money put option, open interest will be decreasing. And in certain scenarios you will be finding only in the money out of the money call option will be decreasing, and all other open interest will be increasing. And in another scenario you may find put out of the money operators will be decreasing and all other operators will be increasing. You have to find what type of market pattern you are in, based on the open interest you recorded, and based on that we can make some decision. Now, that decision will be set in the next session. So from out of the 8 possible scenario, this strategy can be applied on situation 3, 4, 7 and 8. Among these, 3 and 4 can be seen as a confident direction, while 6 and 7 can be seen as a lesser degree confident direction. If you are seeing 3 and 4 behavior, then we can apply confidently and place a trade in that direction where open interest behavior is seen. If you are seeing 7 and 8 direction, it will be skewed to negative, but confident on this trade is much less. All other open interest situations are in this kind of analysis invalid. Cues from the different situations in the above scenarios are 3 equals strong down, 4 equals strong up, and 7 equals up. It's a lesser confident degree of up, and 8 means down. If open interest data is showing any other behaviors or scenarios, there is no trade under. Once you are confident about the market scenario, immediately you can take the position based on the Q. Strong down means strike 200 points down the spot, PE. Strong up means strike 200 points up the spot, CE. Up strike closer to spot, CE. Down strike closer to spot, PE. For example, if the spot is 38404, strong down 38200 PE, strong up 38600 CE, up 38400 CE, down 38400 PE. Exit. Under this strategy, you can exit the trade within 1 hour from entering. If you are carrying the position, then it must be done along with strong conviction on continuing market scenario explained in